On that note, it's indeed an honor to now call upon our chief guest of today. It's indeed a pleasure to always have him join us at the N-Cube Collaborations platform. We have with us Mr. Anand Sinha, who joined the Reserve Bank of India back in July 1976 and rose to become the Deputy Governor in January 2011. He was an advisor in RBI up to April 2014 after demitting the office of Deputy Governor in RBI. As a Deputy Governor, he was in charge of the regulation of commercial banks, non-banking financial companies, urban cooperative banks, and information technology, amongst others. He's been closely associated with the banking sector reforms in India, and today as a chief guest, it is indeed an honor to now welcome him on the podium, ladies and gentlemen, the former Deputy Governor, RBI, Mr. and Shri Anand Sinha.
Mr. Narendra, fellow panelists, and the participants in this program. I'm glad to be associated with this particular version where we are talking of future-ready leaders in India's Viksit Bharat Season 4. I think this is the particular version which is focused on the issue of becoming a Viksit, a developed country, by 100 years of our independence, that is 2047. So becoming a developed country by 2047 is not only about having a much larger per capita income, but it is perhaps more about Indians enjoying a much higher quality of life like those enjoyed by developed nations. Today it looks more like a dream, but actually we have been there. We have been a developed country in the past, and that too not too far back. For a staggering 1.5 millenniums, that means 1500 years, AD or CE, India was the largest economy in the world, accounting for more than 25% of world GDP. Subsequently, China overtook India by 1500 CE, but India remained the second largest economy, and the two economies remained the world's largest until as late as 1870. With colonial exploitation, we became an impoverished country, a pale shadow of ourselves, and counted among LDC, that is, least developed countries, at the time of independence. In fact, you would have heard of, which is very much in discussion or in the news, about an Oxfam report which says that British took a staggering 64.82 trillion US dollars away from India. And Mr. Shashi Tharoor has written a very good book on this, An Era of Darkness. So nevertheless, despite the fact that at independence we were an impoverished country, there has been a sea change in the last 7 decades. India has made significant strides in economy. In fact, we carry the tag of fastest growing major economy for quite some time with continuity. And the recent World Bank report says that we will continue to be so, and that will be growing around 6.7% for the next 2 years. Now, after COVID, of course, we had a high growth phase from 2003 to 19, when our average GDP growth rate was 8.8%. And we have done very well, despite the fact that we have to do lot more on socio-economic metrics, apart from the GDP numbers. We have made very large strides in science and technology, even in sports, not only cricket, but other aspects also. Look at our leadership in digital technology, strides in space technology, and the fact that 40% of global GCCs, that is, global competency centers, they are located here in India and manned to a very large extent with the Indian talent. So today, with India becoming the world's 5th largest economy from 10th spot in 2014, we are well on our way to claiming the 3rd spot, hopefully by 2027, reaching $5 trillion US dollar economy size. And of course, in the context of Viksit Bharat, we have an aspiration for India to become a US dollar 30 trillion economy by 2047, with per capita income high enough. That is, in terms of World Bank, it should be around 14,000 US dollars of 2023 by that time. Yet we are lagging in many aspects, where despite significant progress, the position is abysmal on certain fronts. Weak performance of the Indian state in delivering basic services is a very critical constraint to India's development, and the scale of the problem is staggering. In fact, in a recent book, Accelerating India's Development by Professor Karthik Muralidharan, I have taken this statistics from that book. There is a huge deficit in education and healthcare of children. Around 10 million children finish their education every year without the basic skills to participate in a modern economy, and nearly 35% of children are stunted. There is increasing inequality. This is again something which has been very much in talks. And unemployment, that also we know. Millions of workmen remain trapped in low-wage, unsecure jobs that fail to provide economic mobility or stability. So why I'm mentioning all this is that becoming a developed country, a Viksit Bharat, is not only about GDP, is not only about GDP per capita, which may, even if it happens, you may have a very skewed economy with the have-nots being in abysmally not so good position. For example, the statistics which I quoted, unless these are taken care of, the dream of becoming a developed country would only be partially fulfilled, even if we meet the per capita GDP targets. So how do we, let's talk about the GDP part itself. The GDP has to grow for 8% plus in the least, continuously for the next 23 years. Now, this is a very, very huge task. If you look at the GDP part, we did very well post-COVID for 3 years. But see what is happening in 24-25. We have one of the lowest growth rates. And the international scenario is such that it will continue to pose difficulties for our economy because of trade war, because of geopolitical issues. And therefore, every year that we grow below 7% or below 8% is going to add to pressure in the coming years. And 23 years is not too long a time. Our FDI has dropped. FPI, as you know, has been very volatile with downward bias, and rupee has weakened despite substantial market intervention by RBI. Our exports, unfortunately, has not done well in the last decade. And that, apart from having an impact on our GDP, also has a deeper impact on employment, in particular on our exports through the MSME sector, because that is a sector which contributes a lot to exports and, more importantly, to employment. So, given all this scenario, what do we have to do? We have to have a very clear vision. We have to work in a mission mode. And it has to be a collective endeavor of central and state governments and citizens. This calls for an accommodating, stable, and forward-looking policy, environment in which all three arms of the government, that is legislature, executive, and judiciary, and the union, state, and the local governments, coordinate policy formulation and implement effectively. But we have a lot of strengths, and we have to leverage that. Some of them, political stability, democratic polity, by and large, non-reversal of progressive policy changes that we have done or we have been doing. We have democratic dividend, we have entrepreneurial strength, and we have increasing geopolitical heft, technological strength, and world-class talent. And very important, we have quantum leap capabilities while we are working in mission mode. So in general, the state has not been very effective, though has improved quite a bit. But when it comes to working in mission mode on specific targets, we have been very good. For example, conduct of world's largest elections, vaccination campaign, moon mission, etc. So keeping all this in view, we have to leverage our strengths and work on our weaknesses. Now, coming to the question of economics, to promote growth, acquire momentum, and create jobs, special emphasis must be paid to support manufacturing in labor-intensive industries and MSMEs. To improve MSMEs' access to credit, this sector should be encouraged and trained to, apart from building its capabilities, formalize itself, that is, come into a formal system by maintaining proper financial records and joining various platforms which are available today, like Udyam, GST, Account Aggregator, ONDC, Open Network, Digital Commerce, and Trades, etc. The idea, see, the difficulty of MSME in getting credit is that there is not enough data available for banks to carry out their traditional methods of assessing credit risk. So what will happen is that if these platforms, they join, this will generate a large digital footprint which can be used by AI, ML-based credit risk models to assess their credit needs. An important use case of AI in the financial sector would be RBI promoted ULI. UPI, we all know, it's a wonder. Now there is an experiment going on which is known as ULI, United Lending Interface, modeled on UPI, which is currently under a pilot stage. This platform will facilitate seamless and consent-based flow of digital information, including even land records of various states from multiple data service providers to lenders. By digitizing access to customers' financial and non-financial data that otherwise resides in disparate silos, ULI is expected to cater to large unmet demand for credit across various sectors, particularly for agricultural and MSME borrowers. If it succeeds like UPI, it will transform the entire scenario of MSMEs and therefore of job creation. There is another RBI initiative which pertains to pilots launched for use case of CBDC for wholesale and retail payments. And there are two other use cases attached to that. One of them is programmability feature of CBDC. If that works, then that will again result into more inclusiveness, because the problem is that agriculturists are not able to, in many cases, are not able to get bank credit because they can't show land holding. Now, this is a programmability of CBDC that it will program the end use for purchase of agricultural inputs, and that will give required comfort to banks and thus establish the identity of a farmer, not through his land holding, but through the end use of funds. Apart from that, we need a larger financial system with countrywide coverage, which is the system which is sound and resilient, technologically sophisticated and nimble. So we need more banks, we need more NBFCs and other financial institutions. We have to go for privatization, a move that was started by this government, but somehow it has petered off. And the government presence should be there only where market failure is there, or where you are creating a public platform like DPI, that is your data public infrastructure, digital public infrastructure. So privatization will give a lift to the banking sector. Coming to the regulatory side, of course, we need efficient, sophisticated, and nimble regulatory setup which provides a fine balance between regulation and innovation, protects the customers, and maintains financial stability. Now, there is always a lot of talk about regulators stifling innovation. So I want to talk a little about that. If you look at the dynamics of innovation, I mean, having been in the seat looking at innovation going haywire in many directions, threatening financial stability. So that is how a regulator intervenes. Innovation happens in the commercial sector. There are some instances, though not too many, where innovation is led by the regulator. But by and large, it happens in the marketplace. Now, when that innovation attains a particular size, a critical size, when it can have an impact on financial stability, or when there are too many customer complaints, that is when the regulator steps in. And if things are not all right, then obviously there would be constraints on that. And that leads to complaint about innovation being stifled. Now, if there is a more responsible innovation, and in that context, let me say, I'm talking about banks, but that is equally true for any financial institution. Banks are the first line of defense for themselves. Banks have to run themselves. They cannot outsource that running to markets or to the regulators. And within the bank, the business units, the risk-taking units, are the ones who have to be mindful of what they are doing. They also cannot internally outsource it to assurance functions. Now, if the commercial entities and the people there wear a bit of a regulatory hat, just as regulators are expected to wear a bit of commercial hat, then I think innovations will have more latitude than what is complained today. Now that there's not much of time, so let me mention just 2-3 things without going into explanation. Talking of AI, everybody talks about AI. It has to make forays in the financial sector. It already is very much there, but then it has many more uses, and that should be investigated, that should be developed. In fact, according to some reports, AI could increase global GDP by 7 to 10 trillion over the next 3 years. Large language models are estimated to increase the productivity levels of workers by 8 to 36%. And forecasts suggest that generative AI will contribute about 360 to 440 billion to India's GDP by 2930. I mean, this is from an RBI report. So India is uniquely positioned to unlock new growth avenues and optimize existing ones. India has a lot of AI talent. In fact, a recent report I happened to read, where in terms of global AI index, India is ranked 10th out of 83 countries. But in terms of talent, it is ranked second, only after US. So what does it mean? That there are many things which are missing, despite so much of talent. It is in terms of funding, it is in terms of infrastructure. AI needs to be regulated so that its downside, and there are quite a few downsides, are taken care of. Time does not permit me to go into details. I'll make only 2 more points. One is the climate crisis. There is a target, but the way that is to reduce to cap the increase in warming to 1.5 degrees Celsius above pre-industrial levels. Now the current trajectory suggests that it will be, by 2100, the warming will be up to 2.7 degrees. And enough funding is not coming, and now with Trump becoming president and pulling out of Paris Agreement, the commitments are also likely to go haywire, because if US is not willing to abide, it will encourage other countries, particularly the emerging market economies, which depend a lot on fossil fuels, to back out, but that will be disastrous. Now government is doing a lot of things. RBI has taken a number of steps, but these are all in pipeline. Even internationally, the things are more in pipeline than in a formal stage. So I think in a few years, the financial aspect of climate change would take a more concrete shape. In fact, while a lot is to be done, India, based on a climate change performance index, and it was a surprise to me, has been ranked 10th in 2025, remaining among the highest performers. It has shown strong progress in renewables, especially solar, but remains heavily reliant on coal, being among the countries with largest developed coal reserve and planning to increase it. The last point which I would like to mention in a minute is the fact that we have glorified jugaad smallness too much. In fact, it leads to low productivity. And there is a need that while the smaller establishments, whether it is in agriculture or manufacturing, are nurtured, but there should be encouragement to build up scale, because that leads to increased productivity. So to sum it up, the dream, the aspirations should be followed in all sincerity, but it's a very tough task. And at least we should try and reach over there, irrespective of whether we actually reach there or not, because that will make the path easier for future. Thank you.
So may we request Sunil Ramkayani to please join us. Also, Dharma Kirti Joshi. If we do have Rohit Mandotra, yes, we can see Rohit as well. The three of you, if we can request your company on stage. I believe Sunita had to make a move, so she's not with us on the felicitation time. So with that, let's give them a big round of applause, ladies and gentlemen. What a fantastic inaugural ceremony it has been, with their key takeaways on how India can progress towards becoming a Viksit Bharat vision of being a developed country by 2047. So with that, we have our dignitaries on stage doing us the honors. We have on stage Shri Anand Sinha, Sunil Ramrakhiani, Dharma Kirti Joshi, and Rohit Mandotra. And may we request all our dignitaries to please come together for a group photograph. Let's capture you all in one place. Of course, we'd request your company on the same. Can we request all of you to please join us for a group photograph? So, ladies and gentlemen, my humble apologies. There is a slight delay which could lead into the lunch breaking in at 1:40 instead of 1:15. Apologies, we don't have much leeway on the same. But we're trying our level best to cover up in our next